OKLO lit up the nuclear sector with plans to develop a $1.68 billion fuel recycling facility in Tennessee, creating over 800 jobs and recycling used nuclear fuel into fuel for fast reactors. It's partnered with ABB to enhance technological capabilities and is working with the Tennessee Valley Authority to explore opportunities for recycling used fuel and selling power. The fuel recycling facility is expected to begin producing metal fuel for OKLO's Aurora powerhouses by the early 2030s, pending regulatory approvals. In the meantime, Chewy delivered solid second quarter results with net sales of $3.1 billion, an 8.6% year-over-year increase, and improved gross margins. Adjusted net income rose to $141 million, with adjusted earnings per share increasing by 10 cents year-over-year to 34 cents. Chewy's CEO highlighted the company's differentiated value proposition, with active customers and share of wallet growing 4.5% year-over-year. Despite a decline in net income due to the absence of a previous year's tax benefit, Chewy raised its full-year net sales guidance for 2025 and launched a new dog food line called Get Real. Chewy's continued success will come down to its ability to convert strong e-commerce execution and product expansion into long-term customer loyalty and steady growth. The company's recent moves, such as launching Pup Street premium dog apparel, aim to attract and retain active customers. Moves like this don't just target long-term growth in e-commerce, it's also a test of its ability to expand beyond autoship subscriptions. Speaking of subscriptions, FUBO TV, a sports-focused streaming service, is set to acquire Disney's Hulu Plus live TV streaming business in a deal that will leave Disney with a 70% ownership interest in FUBO. Despite this expansion, FUBO has been struggling, with its subscriber base declining nearly 20% in 6 months to around 1.4 million. The Hulu Plus service FUBO is acquiring also saw a decline in subscribers from 4.6 million to 4.3 million in June 2025. FUBO's strategy revolves around its sports content, highlighted by the launch of FUBO Sports, a standalone sports streaming service offering over 20 sports and broadcast networks, including ESPN and NFL Network, for $55.99 per month. So when you're done watching sports, look at ACHR Aviation, which will participate in the White House's new electric vertical takeoff and landing aircraft program, known as the eVTOL Integration Pilot Program, EIPP. The program aims to accelerate the rollout of flying taxis by allowing manufacturers to test electric aircraft before full certification. ACHR will partner with United Airlines and local governments to conduct trial operations of its Midnight aircraft, focusing on safety, quiet operation, and scalability. These trials could begin as early as next year and will inform future certification and commercial expansion. ACHR's CEO, Adam Goldstein, called this development a landmark moment for the industry, crediting government backing as vital to adoption. United Airlines CFO, Mike Leskinen, believes electric flying taxis can reshape urban transport for passengers. The EIPP was established by an executive order signed by President Donald Trump in June 2025, directing the Department of Transportation and the Federal Aviation Administration to set up controlled operating environments for eVTOL aircraft. The program will provide critical operational data and community engagement needed to scale this new mode of transportation. For more on stocks and crypto, follow Ascencore. See you next time.